All right, good morning, traders. All right, if this is your first time seeing this page, these are all in daily uptrends over the 17 EMA down here under the bulls column. These are all in daily under the bears column. These are all in daily downtrends under the 17 EMA. If they got a star next to it over here, they're building out a bull flag. Star next to it over here, they're building out a bear flag. This would be a launch pad to launch higher. This would be a platform from which to dive lower right there, if this is your first time seeing this. All right, let's take a look at the markets and see what we got going on. So this is going to be my trading count. Okay, we made 530. I made 531 yesterday. So my max risk is 10%. It's always 10%. It's going to be 3,053. My daily goal is 1%. So I have to make 305 today to meet my daily goal. Okay, so that's what I'm looking for today. All right, let's take a look at the markets. Okay, so I just want to say, let me get my drawing tools out. Might take a half hour for those to fire up. All right, so we had a inverse bullish head and shoulders going on. Okay, with the head down at the bottom, right shoulder over here, left shoulder over there. Okay, now it's looking like, so far, what it looks like is, here come the tools. Here we go. All right. So trash that out. All right. So let's get the line. Okay. So we had, this would be right there. That would be left shoulder. This right here was the right shoulder. And then this round structure right here, this is the head. Okay. So if they decapitate the head, okay, that voids the bullish inverse head and shoulders pattern. Okay, so just saying, if we break this line right through here, right through there, right there, if we break underneath that, that would negate the bullish head and shoulders pattern, and we could come tumbling all the way down to the pivot. I'd look for $1.25 bounce on the pivot. All right, if we get through the pivot, then probably coming down to test the all-time high anchored VWAP one more time. All right, so this pink line, that represents the all-time high this morning. Now, before all of this happened, everything was looking fantastic. All right, I just want to point this out. We had consolidation right through here. All right, right through there. And if you look, we had consolidation over prior consolidation, which was a beautiful bullish environment. Now, the bulls may come in and rescue this. If they do, all right, we got ourselves a bullish bias, all right? Now, if they take out the head, that's not the same, all right? But if the bulls come in and rescue this, that would be a bullish bias for me, all right? And I would see, I would look for a continuation or a 10-minute uptrend to manifest down here today, this morning, when the market opens. All right, so this was bullish until this right here just happened. Now, if the bulls rescue it, that will be awesome. Then I'll still have that bullish bias. But them taking out this low, we'll see what happens here in the market this morning. Okay, so because we get down here and start consolidating, then we're obviously coming down to the pivot. Now, I want to back up because we did see some, we did hit something yesterday. Okay, so let's talk about what we hit. So let's go to the 3-bar chart. Let's pick up a clean one. All right, and let's talk about what we hit. So this candle right here, this is our all-time high right there, this red one. So we're going to start a line coming off there, and then we're going to start connecting the tops. Okay, so you see that. So we got the all-time high, got a little lower high here, actually a little lower high here, and then another lower high here. So we ran into a downtrend line or resistance right here yesterday. Okay, so it's possible they come down here and check out, see this valley between two peaks. They may come down and check this out today. Okay, just saying, there's a possibility. All right, because what they're going to be looking for is support because they couldn't make a higher high. If we go back here to the 10-minute chart, you'll see they tried to make a higher high here. They failed. Okay, in the post-market, pre-market, they tried to make a higher high here. They failed. They tried to make a higher high here. They failed. All right, so there's like 2 failures in the pre-market, post-market activity and 1 failure right here. So they may test it 2 more times, and if that doesn't work, chances are we're coming down here to check out, that valley between the 2 peaks, which would be this support area right through here. So that'd be 684.71 area. All right, so we'll see what happens. Okay, now we came up rather fast. Okay, like I said earlier yesterday, had we melted up or did some type of zigzag on the way up where we make a high, make a higher low, make another had we gone up, made a high, made a higher low, then made another higher high, had we done this, they could have probably made it through. All right, but because we went straight up, because we went straight up there, all right, now they're going to have to consolidate for a little while. All right, it's either that or they're going to, triple tap it and try to get through, and then failure, they'll come tumbling down. All right, so we got up there way too fast in one shot. So we'll see what happens, all right? Because when that happens, you kind of like you hit a brick wall. Had we just kind of melted up there, it's like going through the school zone, all right, with all the speed bumps, all right, we could have easily negotiated all of those speed bumps along the way, and we could have probably passed right through without them even knowing we were there. Okay, but because we came zooming in so fast, like an F1 fighter jet, all right, what happens is we hit this wall of resistance and you can't get through, all right? So you're going to have to consolidate and kind of like work your way through the wall. You have to like chip away at it, and that would be a wall of sellers up there. So we'll see what happens, all right? But we tried once yesterday. We failed. We tried twice in the pre-market. So now they're going to come check out the lows right through here. This would be normal. If these lows fail, we could be coming all the way down to the valley between 2 peaks here, okay? I don't think so. I think we actually just keep waffling around, and eventually you're going to see a pattern where price makes on the smaller time frame, it makes a low, and then it makes the next candle's going to make a higher low, and the next candle's going to make a higher low, and you'll have this pattern, what I call is ascending bottoms or ascending tails, all right? And it'll wind up like this, and this is the wind up before they take off and blast through and go challenge the all-time highs. Okay, so we'll watch for that to happen, okay? So right now, doesn't look like they got enough mojo to take out the head. So what will happen is we'll probably wind up coming back up here, trying this a couple more times before giving up. I actually think they're not going to give up. I think they're up here, and I think they're up here to stay. I think they just consolidate right above this line, and I think they continue to pound away at the wall above, which happens to be the resistance that sent price really, packing down here. Okay, so I think they're up here, and I think they're going to move sideways today. All right, because all of this is bullish. We are holding. Let me take all the drawings off. All right, and let's take the quad lines out. Okay, so we're holding, all right, the upper third. We see how we're up in quadrant 4, and we're holding the higher ground. That's a bullish environment. Now, it looked real nice this morning before we had this check out of the lows one more time. This is normal. This is normal stuff. All right, this is still bullish up here. So I would expect another couple tries here on the top. So once you see bullish engulfing here, for me, that would look interesting for me to take that right back up there. All right, but haven't got bullish engulfing yet. Let them show us the bottom first. All right, so let's take a look and see where the bottom's going to pan out. That may be the bottom. It may not, but we'll see. Let them start that 3-minute uptrend. Right now, still 3-minute downtrend. You can see you got the candlesticks, and the 3 are riding underneath the 8. Okay, so let them spin it around, and there's a good chance they come all the way back up here and try this again a couple more times this morning. All right, so we'll see what happens on the 3-minute chart. There's SPY. All right, let's take a look at the 10-minute chart, and let's look at yesterday's price action. So I'm going to come over to this chart here, and we're going to go to the 10. So you can see we got the sticks and the 3, okay, underneath the 8. Okay, so what we traded yesterday is a 10-minute chart, all right, was a continuation of the 10-minute uptrend from Friday. So here's Friday's 10-minute uptrend, and we traded, yesterday was the 9th, a 10-minute continuation of the same pattern. And if you look at what happened, price moved up and then over to the right. Okay, that's price holding the higher ground. That's bullish. That's very bullish. Okay, they're way up at the top of quadrant 4 there. Okay, so that's bullish. So they're going to come down here and test the lows one more time, I guess, or one more time, maybe 2 more times. They're probably going to bang away at the top one or 2 more times as well. So SPY coming into the close yesterday. Okay, you can barely see it. Now you can see the yellow line is underneath the white line. So you got the sticks and the 3 underneath the 8. So you got a 10-minute downtrend coming into the close. On the 2-hour chart, okay, we got the sticks and the 3 riding up over the 8. Okay, so we got a 2-hour uptrend coming into the close, like that. Okay, on the daily chart, higher low, higher high. Closing, see the 3 EMA crossing over the white line. Okay, so that's a bullish cross. Crosses from down below, up over. So we got, on the daily chart, we got price, all right, closing over a bullish cross. And you can see the dots are green. Then they turn red. Now back to green. Closing over the 17 EMA, because that's what the dots are right there. Now we put the quad lines on there, right here. All right, and let's back way out. Okay, this is our origin of our rally, all right, or our wave up. So there's the origin of it. Starts in April. We're at the top of quadrant 4. Remember, everything in the upper third is bullish. Okay, so we're at the top of quadrant 4. See, we're way up here, all right, but we're still in a downtrend because we haven't made a higher high yet. Okay, because there's a low that came below the 17. Okay, and we made a lower low right here. So we're in a downtrend that's not working, okay? It's actually prices moving up. See the 2 green candles? Price is moving up. So it's a failing downtrend, okay? Because price is not moving in the direction of the characteristic of the trend, like it's a downtrend, but price is moving up here. So you're getting a pullback in the downtrend. So we got a failing downtrend or a pullback in the downtrend. Either way, downtrend, but not working. And up there at the top of quadrant 4, that's bullish. Okay, remember Diamond Dow, Friday and yesterday made new all-time highs, okay? So this is a nice setup for us to make a new all-time high here today on SPY. Maybe even 700, all right? I will probably be looking at some 700 calls. Okay, so there's SPY on the daily chart. On the weekly chart, obviously all the green bars right here, the green balls, that's the 17 EMA. So weekly chart in an uptrend, nothing broken on the weekly chart. Monthly chart, see all the green balls there for the 17. Still bullish and in an uptrend, all right? So let's take a look at QQQ. All right, QQQ on the 10-minute, all right? Same thing, kind of mimics the SPY. Got a double top up there, okay? Got the 3 and the sticks underneath the 8. Okay, so you got a 10-minute, it's 10-minute chart, 10-minute downtrend right there coming into the close. On the 2-hour time frame, we've got a 2-hour uptrend. Got the sticks and the 3 riding up over the 8. So that's a 2-hour uptrend coming into the close. On the daily candle, we've got a higher low and a higher high. We closed over a bearish trap, but under the falling 17 or the flat 17 there. There's a low. We're still in a lower low, so we're in a downtrend, but we're up in the upper third. So, okay, because remember, here's our April. This is quadrant 1. This is the origin of the rally. See how price moves up, holds that higher ground. So you got price up here in the middle of quadrant 4. That's bullish, but we're in a downtrend that's having a pullback right now. That's QQQ. Weekly chart, obviously bullish in an uptrend, nothing broken. Monthly chart, okay, obviously bullish and in an uptrend, nothing broken there on QQQ. Let's go take a look at the game plan. All right, come over here. Let's zoom back over here. So we got the pivot, 611.40. Above it, I'm a bull. Below it, I'm a bear. Red erases green. See that tail? There's a little tail right here on this candle. You got red erases green right underneath that tail. Okay, 605.05. Below price. Closing candles below 605.05. That's a bearish red erases green entry right there. Okay, this is QQQ. Green erases red. Okay, so we got the pullback from yesterday. So if the bulls come in and rally price back up to that point and beyond, that will be a green erases red entry right there over 616.40. Okay, that's the QQQ game plan. Okay, I'm going to go over this when I do the SPY because they're both going to be the same. All right, so let's go check out the SPY. SPY has a game plan as well. Okay, SPY pivot, 691.40. Above it, I'm a bull. Below it, I'm a bear. Okay, you got the red erases green entry right over the highs of yesterday. That double top, so over 695.70. Closing candles up there. That's a bullish entry. Red erases green underneath. Again, if you look closely, there's a tail right there that cuts through that green ball. Okay, so that's red erases green right underneath that tail. So if we break the bottom of that tail, that would be red erases green entry underneath 688.30. All right, and now we've got, I like both on QQQ and SPY, I like 10-minute uptrends over VWAP. All right, I like 10-minute downtrends under VWAP. This goes for both of them, QQQ and SPY. I like strikes $2 to $15 out of the money. Okay, because I'm only trading with a limited amount of risk. All right, I've chosen to keep my risk small. My max risk is $3,053. That's 10% of my account. I keep it this way the whole time. All right. My daily goal is 305. We'll see if I can get it done today. Got it done yesterday. Let's see if we can do it again today. Okay. So my risk is 305. So I don't have a lot of risk. All right. So for that reason, if I buy in the money strikes, okay, all right, it's going to cost me a lot more. Let's just look at it together right now. So let's just call this, you can see price 693.92. Hey, let's just call it 694. for the purposes of convenience. All right. Okay, remember these options are 24 hours old. All right, so let's move this down here. And actually, I need to pull up that one there because that's the one that's ours. Okay, right here. Okay, so I'm just going to go to 0 DTE. All right, that means they expired today. Okay, at 4:15. Remember those index options expire at 4:15. Okay, so 6.94. Okay, so those are $2. Okay, so that would be at the money. Now, if I wanted in the money, see how the price rises to 70, 343, 419. Okay, I usually like to get 10 contracts. Okay, so using the calculator, okay, there's 100 shares per contract. Okay, so it's 100 shares per contract. So one contract is going to cost me, so 100 times 419 a share. Okay, it's going to cost me $419. Now remember, my risk is $3,053. Okay, that's just one contract. Okay, so that leaves me $26.34. Okay, so see what I'm saying? The in the money contracts, you get better performance. Okay, because the delta is higher. Okay, so let's see the delta. See, the delta is 1. So you're probably going to get penny for penny performance on that option, okay? But you're going to pay up for it, okay? See, the out of the money, you don't have as much. On the out of the money, the delta is, well, they don't even have the delta, all right? But it's less than 1 anyways. Okay, so on the in the money, you get the penny for penny performance. On the out of the money, all right, you don't get penny for penny performance. All right, so whenever the security moves $1, your option should appreciate or move $1 with it. Okay, that's what I mean when I say penny for penny performance. All right, so for that reason, I choose the out of the money. Notice how much cheaper they are. Okay, as opposed to paying $419. So if I had $419 times 10, okay, so $419 times 10, we all know that's going to be $4,190. That's going to be way more because I like to get 10 contracts. Okay, so that's going to be more than my risk. So I can't get those. All right? So I would only be able to get just a couple of them. All right? See, I like to keep some extra in case, well, the price dips a little bit and I need to bring my cost basis down to where price is trading. All right, I would have to actually buy a couple more contracts to bring my average down so that I can actually be relevant where price is trading at the current place in time. All right, so for that reason, I choose the out of the money contracts. They're a little bit cheaper, and it leaves me some left over so that I can manipulate the price by buying, okay, more contracts in order to bring my cost basis in line to wherever price is trading. That way I can start taking profits sooner rather than waiting maybe till the end of the day for price to get all the way back up there. Okay, so if you're in the money at the end of the day, all right, then your option will close with a positive. All right, if you're out of the money, it will go to 0. All right, so if we're at 694,
Sorry, I'm a little late.
hold on just a second here.
Happy Tuesday to everybody. I'm a little late getting started here, so I'm gonna.
Got that right there. Okay. So if you're at 694 and we close at 694, this is a zero DTE. This option's going to be worth 1 penny. All right. So say we close at 694 and 1 cent. All right. This option is going to decay. All right, down to 1 penny. All right, at the close, if that's where we close, 694 and 1 penny. All right, so for that reason, I'm just showing you that's why I choose the out of the money options, because I can get more of them and I can defend it. Now, I have to constantly monitor and roll in and roll out of them in order to maintain that my cost basis is relevant, all right, to where the price is trading at the current place and time. All right, so I like 0 DTE, 3 DTE, 10 DTE Friday options, all right, on the multiple of 5. I like them when they have a lot of open interest. It means less slippage, and I like to see a tighter bid-ask spread. Okay, so if you come back here and we start looking at options one more time, I don't think we have the bid-ask is not up there yet. Yeah. You'll see as you get further in the money, the bid-ask gets wider and wider. When you're out of the money, the bid-ask seems to be very tight, close to 1 penny each. All right, between the two, the bid and the ask. All right, so there's the SPY game plan and the QQQ game plan. All right, 3 DTEs, 0 DTEs, 10 DTEs, Friday options on the multiple of 5, strikes $2 to $5 out of the money, 10-minute uptrends, 10-minute downtrends. That's what I like. All right, let's take a look at Diamond Dow. And we'll look at it on the daily chart. And here's Diamond Dow, makes a higher low and a higher high. So new all-time high for Diamond Dow yesterday. Okay, so you can see right here, price, this is the April low. This is the new all-time high for Diamond Dow, IWM. Okay, so this is the Russell 2000. Okay, so Russell 2000 yesterday, higher low, higher high, closing over bullish cross or bullish trap over the pink line. That's the all-time high anchored VWAP. Over the green dot, so that's over the 17, top of quadrant 4. All right, remember here's our April low. That's bullish and in an uptrend right there. Thank you, Alan. Appreciate that. All right, so there's IWMs. Take a look at, we did Diamond Dow, we did SPY and Q. Let's take a look at Stinker. All right, so here's FNGU. This is a higher low and a higher high. And we closed underneath, closed inside of a bearish trap because the 3 and the sticks are under the 8. All right, and we closed underneath a falling 17. And we closed underneath, see this all-time high, underneath the all-time high. And we closed underneath the midpoint of the quad lines. So if we pan way out, this is our all-time low. Actually happens to be April. And this is our all-time high. So here we go. I put an anchored VWAP on one on the all-time low, one on the all-time high. We're underneath both of them, all right? So we're bearish, all right? This is neutral right now because we're not in the lower third, but we're not in the upper third. Neutral and in a downtrend right now, currently on the daily chart for FNGUs. Take a look at silver and gold. Okay, silver still neutral, having a little bit of an issue here, trying to climb into the bullish territory. Yesterday's price candle was a higher low and a higher high, closing in the bearish trap under the 17 EMA. That's neutral and in a downtrend right there on silver. Let's take a look at gold. Gold's got a higher low and a higher high, closing much better shape on gold. See, silver was down here in quadrant 3. Gold's in the middle of quadrant 4. So higher low, higher high, closing over a bullish cross over the 17 EMA, middle of quadrant 4. That's still bullish and in an uptrend on gold. Okay, let's take a look at USO. USO higher low, higher high. Okay, so here's yesterday's candle high. So we made a higher high. So higher low, higher high. Closing over a bullish trap over the 17. Okay, up there in quadrant 4, that's bullish. And then an uptrend right there on USO. Let's take a look at UNG. UNG lower high, lower low, closing underneath. See the sticks and the 3 underneath the 8. All right, so underneath a bearish trap, underneath a 17 EMA, underneath that 12-month high or 10-month high anchored VWAP right there, okay? See, what we wanted to see was price hold the higher ground. See how they failed here? Okay, so they got up there with 2 candles, and they couldn't do it. They got up there with 1 candle, and they couldn't do it. All right, they got up there with 1 candle, couldn't do it. Another candle, couldn't do it. All right, so it's been struggling to hold the higher ground. Just nothing happening recently. All right, so there's UNG. This will be down in quadrant 1, so that's in the lower third. So that's bearish. All right, and they made a lower low, so now they're in a downtrend. That's UNG. On the technicals, start off with G2101. We've got price went up yesterday and participation went up. So that's a bullish sign. I like that. That's T2101. T2122. Price went up yesterday. We made a higher low. That's a good sign. We did not make the higher high, but we did consolidate in the buy zone. That's a bullish sign right there. T2122. T2123 made new all-time highs. Okay, up over the rising 200 SMA, new all-time high. Obviously bullish and in an uptrend. 3-bar chart, same chart. Okay, here's the April low. There's the high. We had a pullback to the neckline. And now we have a higher high. So we got a new all-time high made yesterday on T2123. Stinker on the 15. All right, so Stinker made big move up. Didn't make any lower lows, so we're got a high. We made a higher high, so we're in a 15-minute uptrend. All right, but clearly with the quad lines on there, okay, we're down in quadrant 1. So that's bearish, but in an uptrend. Okay, would have really liked to see them close over the falling 200. Okay, would have really liked to see them close out of the lower third. Okay, just can't get it done right now. That's on FNGU on the 15-minute chart right there. Okay, we'll look at economic events, see what we got going on. Alan shared some of them with us. Okay, so let's take a look at Max Payne first. All right, I'm going to refresh it because they like to change it on me. Said 388 earlier. All right, see, 688. So now look at it. They changed it. It's 692 with a put-to-call ratio of about 1.2 puts for each call that expires today. For the economic calendar, what do we got? We got some delayed reports. We got NFIB's Small Business Optimism Index. That's at 6 o'clock. At 8:30, we got these are delayed reports. Retail sales, 8:30. Employment Cost Index, 8:30. Import-export prices, delayed report, 8:30. And business inventories, delayed report, 10 o'clock right there. All right, tomorrow, this is a market mover right here. This is called the employment situation. That comes out at 8:30 tomorrow. Got a petroleum report at 10:30 and a treasury statement at 2 right there. Okay, so that's it for that. And then we've got earnings. All right, on the earnings front, we've got AstraZeneca looking like, 595 billion. That's over half a trillion. Okay, so pharmaceutical reporting this morning. Coca-Cola, consumer defense. Okay, they call it consumer defense because when the market is done rallying, all right, and price is just consolidating or having a pullback, what happens is fund managers go to stocks like Coca-Cola, Safeway Foods, Cisco. All right, they go to food and utilities because those are just tried and true people. Those are staples that everybody needs every day. So they become defensive stocks. In other words, something like Kraft, all right, which sells, you know what it sells. Sells, salad dressing, pickles, ketchup, you name it, relish, whatever. Okay, so someone like Kraft, just has a constant stream of sales. Nothing's ever going to really change with Kraft, other than the fact if they lose some market share because they decide to overprice something, but they're pretty good at what they do. Same with Coca-Cola. All right, that's why they call them defensive stocks, because they're probably not going to dip all that much. Whereas the technology, when it goes up and it has a pullback, the dips are quite severe. All right, so something like Coca-Cola would be something that they call consumer a defensive stock, because when we're done with the tech, you'll see a flood of money, head on off to Unilever, Coca-Cola, some things like that. Okay, so Gilead Sciences reports tonight. By the way, Coca-Cola's $339 billion in market cap. That's over a third of a trillion. Gilead Sciences, I'm not sure what they do. All right, it's 189. They could do tech. They could do pharmaceuticals. I have no idea. Welltower, $134 billion. S&P Global, pretty sure that's software. $133 billion. BP, I'm pretty sure that's oil. That's $101 billion. Okay, a lot of familiar names: Spotify, Marriott, Duke Energy, CVS. Okay, a lot of familiar names down here, but not really market movers. Nothing here is really going to be a market mover today. Even though AstraZeneca is almost $500 billion, almost 2/3. Okay, not far, but I mean almost 2/3 right there. Okay, of $1 trillion. Okay, the market really doesn't react so much to these. Okay, it's the technology is what they're looking for. All right, whenever they see good news in tech, you're going to see, or bad news, and the market will respond in a market moving fashion when they see that. Okay, so just keep an eye on the tech. Always kind of remember that. Like Cisco, even though that's a third of a trillion, half as much of what AstraZeneca is, all eyes will be on Cisco because it's a networking hardware, all right? And they'll be looking at how well they're doing to measure the build-outs in the network, okay? So there'll be a lot of eyes on that one, okay? Not as much as like an AMD or an NVIDIA, but there'll be a lot of eyes on technology. McDonald's reports $231 billion. T-Mobile, $221 billion. Total Energies, $161 billion. AppLovin, $155 billion. Shopify, $153 billion. And then, of course, some more familiar names right there, okay? There'll be eyes on Shopify, all right? There'll be eyes on AppLovin. There'll be eyes on T-Mobile because that helps us get the data that we process and use every day. Okay, McDonald's, not so much. Cisco, yes. All right. So I'll just stop right there because we'll do Thursday, Friday, later on in the week. And that's it. So I'll take questions in the room if there's any questions. Thank you, John, for posting that. Appreciate that. All right, so let's take a look at what we got. And I'll download the image. See if I can open it up here. All right, employment cost index. Looking for a range of 0.08 to 0.09. So employment cost went down. Well, that's a very good thing for companies if the cost of labor for them went down. All right, year over year, 3.4, right in line. Okay, that's employment cost. So I would say that would be good for business, not so good for consumer. Okay, and it doesn't show like there's a lot of money getting returned back to labor. All right, you want to see it like whenever you got quantitative easing or stimulus. All right, something like that will definitely juice the market. Whenever you increase taxes, okay, that will cause the market to pull back. You won't get as much sales because everything costs more. All right, so what you want to see is money being returned back to the labor market, as well as the companies getting leaner with their cost over time. So we'll see what happens with that. Okay, start the next one is employment cost index. We've got two there. Did we get two on this day? Retail sales, employment cost index. I think he posted the same one twice. He did. That's all right. I still appreciate him posting. That's all right, Alan. No worries. I'm just grateful you shared them with me because I don't usually have the time to go get them. Here it comes. It's a little slow. I got a lot of stuff going on. All right, retail sales, month over month. All right, the consensus was 2.2 to 0.6. The actual was Zippo. We got misprints here, or what? Did they not do their job, or any idea what happened there on the retail sales? I don't expect you to know, but wow, that's they missed the boat on that. Let me go get Ed Carter's. Ed Carter might have something here. All right, I'm going to go check out his. Let me download that image and take a look at it. My eyes aren't that great, so I have to blow it up so I can see it. And retail sales. Actual was 0. Okay, so Ed got the same thing, Alan. Don't feel bad. All right, so nothing. I guess the delayed data is really, really, really delayed. Okay, so because I know it was more than 0. All right, so all right, the next one I'm going to take a stab at this is import-export prices. And sometimes I don't know how to interpret this. All right, but we'll take a stab at it. Okay, import. I'm gonna take it for what it is. Import export prices, and they're talking about the prices, not the quantity of product, but the prices. Okay, so I would say it would be the price of, let's just say, I don't know, Onkyo stereos, all right? So you must say, or Sherwood receivers, something that came in from overseas. Okay, the consensus was 0.1 to 0.2. So it was at the low end of the range. So that would be great for the consumer, all right? And as long as the company's still printing profits, I'd say I guess that's okay for the company printing profits. Okay, import prices year over year. Prior was 0.01. Consensus. Again, this is delayed data, so we may have some missing figures in here. Okay, so maybe someone's on vacation and somebody didn't get it done. That's a possibility. All right, so the actual is 0. Okay, export prices month over month. Consensus was 0.01. All right, we got 0.00 to 0.01, and export prices increased. Now, I don't know if that includes tariffs. Okay, so what they're saying is what we sold to other companies. Let's say we sold some Chevrolets, all right, over to, let's just say, England. All right, not that they could afford to drive a Chevy, but I mean, they could afford to drive it, but I mean, I'm just saying they tend to use up more gas than those Euro vehicles over there. But anyways, okay, you can see we had an increase in exports. So I guess that would be great for the companies selling overseas. All right, that means that they're going to take in more revenue. That means an increase in the top line. Now, it doesn't necessarily mean it's an increase in the bottom line, but you know, 8 times out of 10, okay, it usually equates to a bigger bottom line, unless management just doesn't have their crap together. Okay, so year over year. 3.3 was the prior year, and for this year so far 3.1, or for the last 12 months. So that's a dip in export prices. I guess that you could say that was good and bad, in that it went down from 12 months ago, the average. All right, but it's still it's still up there, so they're making more revenue coming in to those companies that have a global, well, that have this, that have global sales. All right, I'll just put it that way. All right, and that was a rough stab at that one. Okay, so I'm not real positive on that, but that's the way that I would interpret it, and I could be completely wrong. No, it's not a mistake at all. No increase, no decrease. Okay, so back to those figures. Ed says it's not a mistake. It's just no increase, no decrease. They just flat, all right, on those lines that we didn't have anything there, or it was 0, all right, in the percentage. So thank you, Ed, for clarifying that for me, because I wouldn't have known how to interpret that. Appreciate that. All right, that's it. I'm going to come back here in 15, 20 minutes. All right, we're going to open up the markets and see what's going on with that Head and Shoulders program that they got out going on in SPY. Did they break the Head and Shoulders pattern, or are they still holding in consolidation? So let's go back and take a look at SPY real quick right now in the pre-market, and that's, I want to go back to FNGU. I want to keep that one the way it is, okay? And let's go over here, and let's go to SPY. Okay, so they're working their way back to you, babe. All right, with this, see how they're coming back up here, and now probably going to rally all the way up and challenge the top first thing this morning. Okay, so my plan is to buy some calls, because I think they will race back up here and challenge this at least one time. If they break through, wonderful. I don't expect it to break through. I kind of expect it to fall back, do the gap fill thing, all right, and then J-hook off of that and come back up one more time. That's what I'm expecting it to do. So I'm going to put the arrows in and show you my expectations. Okay, there's no guarantee this is what it is. Okay, so I think they go. Why can't the arrows work? Well, this thing is such a. Can't stand this. My drawing tools crashed on me, so give me 2 minutes and I'll get them fired back up. You know, it only happens when I do recordings. Now, if I don't do a recording all day, they will work all day long. But the minute I start my Camtasia recorder, these things go on the fritz. I cannot figure it out. But they come right back. All I got to do is shut the app down and restart it. Okay, anyways, okay, SPY. So what am I expecting? Okay, we got our downtrend line. Let me draw that in first. Okay, so we got our downtrend line. You can see like that. Let's just say that's where it is, just for purposes, okay? All right, then we get the arrow. So I'm picturing price to come up here and challenge the line, all right? And then hold for, like probably 5 candles. Come back down. Probably catch VWAP, all right? And then come back up one more time, all right? And try one more time. Okay, they may break through this time, okay, on the second shot. Okay, I think they break through on the second shot. Now, if they break through on the first one, that'll be fantastic. Because if they break through, what I want to see if they break through is them come up, come back and test it, make sure it holds, and then J-hook out of there and go after the all-time high and the 700 number. Okay, that's what I'd like to see. All right, this morning. So I'm going to buy calls right out of the gate to come up to here. Okay, buying calls. And I will share with you what I'm buying when I open up my platform here and see what's going on. All right, more than likely they're going to be 698 calls. Okay, so right over here, 0 DTE, 698 calls, which are right here. So probably going to be these, and probably going to be 10 of them, and that will cost me about $250. Okay, right there. See, I want 10. I'll just get 5. I can always add the other 5. Okay, at market. Okay. Turn the trading on. Okay, so I'm ordering 5 at market. Okay, so we'll see what happens. All right, so they may be like probably 20 cents each. All right, but that's the ones I'm ordering. 598, 698. Okay, this is yesterday's pricing. Okay, so these will be differently priced. So I'm expecting another test of the top up here. All right, that's it for me. I'll see you guys in about 20 minutes, and we'll open up the markets.